Welcome to the Rick Helps Real Estate Show. Well, the listing success rate has dropped once again. Those of you trying to sell your house are finding out that only 60% of you are succeeding in getting a contract. Now that means that 40% of you are not. And that number has dropped considerably, as you can see by this chart. The lowest we've been this year was 61%. Now we're 60%. The last time we were at 60% was around April of 2010. Now, if you take a look here and you look at the contract ratio, which is just another way to measure how our market is, we are in what's called a cold market. We've been hanging in this white area there as a balanced market, but we're definitely in a cold market. Now, I came out with a video the other day that said, why haven't we crashed? And I just got to implore some of you people, I just asking the question, why haven't we crashed? And I'm looking at some numbers and I'm looking at our inventory numbers. You don't have to be so nasty. If you don't agree with it, or you just don't have to log on and turn into an instant keyboard warrior and be so nasty. Be civil. I try to be nice to you. You should go back and read some of those comments. You should see the ones that are not approved by YouTube. So if you haven't seen your comment show up, go back and take a look at it. There's probably a reason that YouTube didn't show that to you. So I'll get off my soapbox here. Buyers are back in charge as the real estate market cools. Majority of U.S. homes are now selling below their asking price at the tune of $45,000 under list. Remember 2021, there were just bidding wars. You could ask any price you wanted and you would get above that. And we would sit there and look at 20, 30 offers on a home and have to sort through it and go through these escalation clauses that people would put in. Whatever the other guy I'm going to be $1,000 above that. That was just a nightmare. I don't want to go back to that day. I know we get beat up. You guys just want the market to be hot. No, we don't want it to be that hot. I hated it. Here's where listings are. Active listings gone down. They've almost flattened out, but not quite. Based on my 7-day moving average, it looks like listings are going to decline yet again. We're below 24,000 at a time when people thought that we would be going up like that, and it just has not happened. And it's reflected in this chart. Now, if you really want to go into detail on this chart in the commentary, there's a link down below to sign up for my newsletter on Monday morning. I include this in there with all kinds of other things. It's an easy read on your phone, but it's got some links in there if you want to deep dive even further. But green means it's better than last week. You can see Paradise Valley's 28% better this week than last week. Fountain Hills 17%. And it shows Gilbert up 10%. But they're still at 97.5. A balanced market is considered 100. Seller's market 110. It's a measurement between supply and demand. Now, I'm sticking my neck out. Hang on, I'm going out an entire week here. I think next week you're going to see a bunch of yellow. And why is that? Well, because what we're seeing is people, the reason this has turned so green was because at the first of the month, expired spiked up like they've been doing. So they went up to like 850 and canceled spiked up to about 700, 750. That pulls away from our active inventory. Takes a while for that to shake out. So the numbers that you're looking at to show all those green numbers comparing actually last week to the week before, take into consideration that we had a lot of cancels, we had a lot of expireds. Those have tamped down. Next week, that's going to improve. We're seeing more new listings versus new contracts than we have the past 2 weeks. We've gone down to about 2,650 contracts over the past 7 days. They have been running about 2,700, but we've only been putting out about 2,100 new listings. Again, because of cancels and expireds. So when you've got contracts above listings, guess what? Those numbers turn green. So those are going to change a little bit. Doesn't mean a whole lot. It just gives you a little sense of direction as what's going on in our market. Now, if we take a look over here, this is another one that's really getting interesting. And I apologize, I no longer have my handy dandy magnifying glass because for some reason Chrome got rid of it. They don't have an extension for it anymore. I'm searching for an alternative, but if you look at the far right hand side here, you can see the blue line is actually supply index and the red line is demand. They're both going down. The gap isn't closing. They're both going down. If the gap is closing like it did here, then prices kind of stabilize. If demand is way above listings, this is when you got in the silly season, March of 2021. This is when prices went crazy. If you go back here during the big crash, the meltdown, you can see that supply far outstripped demand. Right now, we're seeing a gap. It's not a huge gap. I'll say it's about that much. Great statistical analysis there, huh? But it's not, even though both of them are going down, they're both going down at the same rate. So it's just getting slower and slower. But I see 2,700 every 7 days kind of being our floor now. We sometimes dip down to 2,560, 2,600, but we're not going down much farther than that. Now, if you want to get an analysis of your zip code, I have this analysis I send out for your zip code, and you can just click that link down below or scan a QR code, and you can see you'll get all of this information like rental rate, economic data, foreclosure rate, interest rate projections, just tailored for your zip code, investment considerations, on and on. To get that, just click on that link, little spot there where you can fill out what zip code you want me to send to you, and when it doesn't automate it, so it doesn't get it right out to you. It gets it to you when I get to it. I try to get to it pretty quick, but I'm traveling now, so I'm usually out most of the day. So if you fill it out in the morning, you might get it during my coffee time. You might not get it until I get back. So we'll see what happens. But you will get it. This is a question that came up actually this morning. How's investor traffic? Let me move my ugly mug here. And the pink line here is the number of people that bought homes for second use, which means as an investor. And we peaked. So here's 2014 right here at 16.4% of our total sales were investor sales. And then we peaked right about here at 21% in 2022. Where are we at today? 12.4, which honestly is pretty average to where we've been. So when you read comments that say investors are backing out, investors going, yes, the number is smaller. But as a percentage of our total sales, it's about the same. They're really looking for bargains. I get text messages every day. Rick, have you got anything for me that needs help? Have you got any sellers that are desperate to sell? I can cash them out in less than 10 days. Now, there's some cautions for that if you're in that camp or you want to sell your house. Anytime you're in a big hurry, you're probably not going to come out too well. But there are these buyers called wholesalers. And they'll put an offer on your home. It'll be a low one, but they're going to promise you cash in 10 days. And they're going to give you a 7-day inspection period. Sounds fabulous. But what happens is they get you under contract. During that 7-day inspection period, they're putting it in other forums like Facebook forums, I think, saying, hey, here's this house. I bought this for $310,000. They don't tell you what they paid for it. It's under contract. They're trying to see what people will offer them. They're trying to get $320, $325, $330 for it. They only gave you $310. That person buys the contract from them, and then they go in and fix up the house. Well, you sold it to the wholesaler for $310. He turned around and sold it to somebody else for a higher amount. If you take your time, you can sell it to somebody else for a higher amount, or find an investor that's actually going to be the one that's going to rehab the unit, and that way you'll go ahead and get their price. But these wholesalers will sweep in quick. If they can't find a buyer, they cancel the contract during the inspection period, and they tell you, oh, I'm sorry, our rehab costs are higher than we anticipated. We just can't move forward with this contract. I've been burned a few times on that one. Really ticks me off. You know, you get the good faith effort and everybody telling you what they're going to come in at, and they don't deliver. Here's where our rates are. We're sitting here at 6.58 today. This is what it's coming in at over the weekend. The interesting thing is that the jobs numbers and the CPI numbers and the core inflation, the wholesale numbers were not good. But it didn't move the bar. I think we were 6.57. All these reports came out and we go, oh, now it's 6.58. That shows you how the bond market prices in their expectations a few months from now. They're already anticipating maybe a 25 basis point cut in September, maybe 50, not 100. When those cuts come in at 25 or 0.50, I guarantee you that number's not going to move because they're already anticipating that, and that number's there. They look at this inflation number and they go, oh, that's higher than we thought. Oh, well. And that's the market that we're in right now. It's a great big, oh, well. So we'll see what happens as we watch these numbers. Now, people are curious what the fall market is going to look like, and that's what I'm hoping to share with you by sharing these numbers. By the time fall rolls around, as you're anticipating selling in the fall or buying in the fall or just waiting it out, at least you will know the overall trend for the market. Right now, the trend is listing activity is flat to the downside. Will that go up in the fall? I don't know. I don't think so. And I think if it does, it won't go up much. There's a percentage of people that at the end of the summer will give it another try. But I think the canceleds and the listings that we've seen all summer, I think they're done for a year. Unless things radically change. I think they're done. The people that let their listings expire, they're not letting it expire to come back in 4 months. They're done. They're going to wait it out, saying, well, let's see what happens. There's a camp that says the economy is going to go to hell in the handbasket. There's another camp that says, man, things are going to be really good. It's always been that way. The haves, the have-nots. It's going to be great. No, it's going to be terrible. Rick, you're an idiot. Just watch the numbers and see what happens. I don't know. So I like to get in here and look and dig and see what's going on. I'm really honing in on new listings. Are they coming up? The sales, they're not going to move until affordability starts improving. And it is improving, but it's not improving at the level that make buyers right now feel comfortable getting in. And they especially don't feel comfortable if they see prices going down. Even if they're just going down a little bit, buyers are now hesitant. Hesitant because there's the old saying they don't want to catch falling knife. They're afraid they're going to go down more. So you're really not going to see buyers come in after rates go down until you start seeing sales go up and pricing start to level off and possibly increase. Will it happen in 2026? I don't know, but I'll guarantee you this. When you start seeing prices start coming back up, that's when buyers are going to come back in. Okay, that must be the bottom. Here we go. But even at that point, we saw in 2010 and 11, people were just saying, this is a bad time to buy. You just saw what happened. Everybody just got their rear ends handed to them. I wouldn't get into real estate at all. I'd stay out. The investors came in and took care of it. They came in and bought leaps and bounds above anybody else, primarily because they were dealing in cash. And secondarily, they were the only ones that could. Everybody else had foreclosures. They couldn't get credit. We're not seeing that now. Foreclosures are still at all-time lows. We're not seeing a lot of that activity. It's going up on a percentage basis. But it's not going up enough to affect the market. So if you have any questions, shoot me an email at rick@rickhelps.com. Until then, take care.